Hey, Couts Group here. This is Mary Jane.
And Melissa.
Um, Great that you could join us today. Melissa, what are you seeing out there for market conditions and changes over this past year?
Yes. So what we've been seeing in the market this past year has been, other than craziness, it's been a little bit of an interesting ride. So we came off of 2020. We had COVID. Everybody shut down. Hope everybody's staying safe and being healthy. But we hit an inventory low. We haven't hit this low of inventory, and I want to say the numbers were like 20 to 25 years.
Yeah, it's been a long time.
It's been a long time since we've been that low. So to put that in perspective, we usually carry, about what we call as a 6-month supply. And to put it into number of units, we hit a low of 1,900 homes for sale between Terre Haute to Richmond, up to Muncie, Lafayette area, and down to Columbus. That's our entire MLS. Only had about 1,900 homes for sale last January. So we're sitting in the 3,000s now, but we kind of doubled up.
A bit of an increase,
Which
helps buyers out there that maybe have been shut down by multiple offers that they didn't get their offer accepted.
Yeah.
But in light of the inventory situation that's improving, you homeowners out there that may have been sitting on the fence this year, maybe it's time to think about doing something and making that move, simply because interest rates are still low. And Melissa, what did you hear they were forecast to be?
We've actually done a little bit of research. We talked to a lot of people. They are forecasting that the interest rates, now that are in the low threes, will be up towards the high threes, low fours by the end of 2022.
That's reducing your buying power.
It is. It's reducing it a lot.
Yeah, and with that said, sellers, that means your sales price or profits are going to be reduced.
Yes.
So now is the time probably to go ahead and act about getting your home sold.
Yes.
And finding something to move into. Everybody's wondering, well, what's going to happen with interest rates?
Yeah.
And we touched on this at the beginning of the video that we do see them going up.
Yes.
Into the upper 3s and 4s. I don't think that our economy can sustain these low interest rates over an extended period of time.
No.
And at some point that it's got to go up. So now, in my opinion, now is the time. You probably aren't going to get a cheaper rate than now, between now and February 15th. After February 15th, that kind of leads into, well, when's the best time to sell? The best time to sell is put your house on the market February 15th.
Yes.
To March 1 and the reason why that is wasn't really the case last year because of COVID and the IRS, but it's that time of year when especially first-time home buyers are filing their taxes and expecting that
the tax return check.
It's a great source of down payment or closing cost contribution in buying your home. So that starts the buying frenzy and flurry, if you will.
Yep.
So if you're a seller, you really want to get on the market during that time so that you can get in there and get multiple offers and people kind of a bidding war on your property. Right. And I think it just all boils down to timing of making a move. And I can't stress that now is the time, because inevitably the market's got to shift in a not good direction, and we've been riding this wave for a long time, and the wave's going to stop.
I think when you say too that wave's going to stop, we're going to hit this point where, because we're at the supply and demand is still off, and we're slowly closing this gap, but with the interest rate still being low, people are still able to purchase. There's still that purchasing power. So when we talk about that interest rate increasing and that purchase power going down, that $250,000 house or $300,000 that you were able to afford at like that 3%. Well, at 4%, that's going to cost you, another 50, $75 a month,
Right.
which I know, everybody's like, oh, well, that's like an electric bill or a cell phone bill. But when we break that down on like a mortgage power, that's actually anywhere from 10 to 15,000. So that $250,000 house just became a purchase price of $235 for the same, for the same payment, same payment. So that's where we're going to be shifting, and that's why we're kind of pushing it. I say pushing, but while those interest rates are still low, it's kind of still a good time to move, because even if we're seeing a lot of people purchasing that 500,000, that right there is a big shift in monthly payment, especially when you are buying a more expensive house. And a house anyways is going to be one of your largest investments, and that's why they always emphasize that interest rate and how that works with your purchasing power. And also, like you said, sellers, as soon as that interest rate increases, that all lowers the buyer's purchasing power, which then lowers your selling, your profit.
So, well, thanks for joining us today, and we'll look forward to seeing you next time.
All right. Happy New Year.